Everyone.
Good morning, sir.
Good morning, sir.
Good morning. Sir, we start with the first topic, with the bookkeeping itself.
Good morning, sir.
Good morning. I think it is visible for everyone.
Yes, sir.
Visible, na? Okay. First, we start with the bookkeeping. Then we move further. Sir, first topic is the bookkeeping and accountancy. This is a very small topic and very easy topic. Very comfortable. You will feel very comfortable by understanding this topic. After understanding this topic, you will feel very comfortable. See, you people are from engineering background, and you have to focus some technical words for understanding this topic. Okay, first we have a bookkeeping and accountancy. So what is a bookkeeping and what is the accountancy? There are two words, bookkeeping and accountancy. See, what we in this, what we have to learn, we have to learn the bookkeeping, we have to learn the primary and subsidiary book, we have to also learn the accounting, we have to also learn the analysis of the financial statement and cost accounting. These are the components we have to know for scoring how much marks. 3 marks. And it is very easy to score 3 out of 3. Then what is the bookkeeping? First, you understand what is the bookkeeping. Bookkeeping means recording, classifying, and summarizing about the financial transactions systematically to know the profit and loss for a specific period of time. It is my presumption. It is my presumption. You people all are have the income tax return. It is my presumption that you people all have an income tax return. At the filing of income tax return, you people, I think you people have seen the profit and loss account or balance sheet. Never the end of the year you have seen somewhere that profit and loss and balance sheet. It is presumed. But if you are not seeing, it is okay. We will show you what is the profit and loss and what is the balance sheet. And what is the bookkeeping? In bookkeeping is nothing. It is generally we record the transaction. Sir, what type of transaction? See, if you have if you talk about the personal, then suppose you have expenses, you have some income, suppose you have earned some income, and that income you have to expend. Yes, sir, we have to expend, or we have to invest somewhere. Yes, either you expense or either you have to invest somewhere. For there, you have to record some transaction. Yes, sir, we have to record some transaction. Where we have what the basis? What the basis of recording transaction? For the invoice. We generally say the invoice. We generally call in normal layman language, we call the bill. We have to see the bill. For the basis of the bill, for the basis of the invoice, we generally record the transaction. That is called bookkeeping. This is talking about the personal labor. If you come to the, if you move to the from personal labor to the business labor, if you move to the from personal labor to business labor, then it is very big. Yes, sir.
Sir, good morning. Sir, everybody is clear with the voice?
Everybody clear the voice? My voice is audible?
No.
For me, it is
थोड़ा problem आ रहा है, थोड़ा problem आ रहा है. Almost clear.
Okay.
Yes,
Then I have
your voice-
to, sir,
Yes, sir,
then
you-
I have to off the video due to
Okay.
internet connectivity.
Your voice is good, but it is breaking, sir.
Now, sir, now it is visible. Now my voice is audible now.
Yes, sir.
Yes.
Yes, sir.
yes, sir. It is clear, sir.
Comfortable now, sir.
Yes, sir. Yes, sir.
Yes, yes.
We are saying, see, we are talking earlier that when we talking about the personal business, personal nature of transaction, then in that personal nature of transaction, if you earn the income, then we have to expense somewhere. Either we have to expense or either we have to invest somewhere. That is, we are talking the personal. In that case, we have to record the transaction. For recording the transaction, we call the bookkeeping. Okay. If you come from the personal, from personal to business, if you talk about the business level, if you're talking the business level, then in business there is a lot of transaction is happening. Yes, sir, a lot of transaction is happening. In business level, we have a purchase transaction. Yes, sir, we have a sale transaction.
Excuse me, your voice is breaking.
Now also breaking, sir.
Yeah.
Yes, sir.
No, sir. Voice
sir,
is
it's
clear.
Fine. It's fine. This side.
It may be at receiving end. There may be low internet.
No.
It's not like
sir,
that.
it is breaking, sir.
It's dropping.
Fine, yeah, it's fine.
It's breaking,
It's-
sir.
Voice is dropping, sir.
There is no issue.
No issue net, sir.
There is no issue here.
No
No
issue.
issue.
It is breaking actually.
Already
Voice is breaking,
have
sir.
off the video. Then also breaking, sir.
Yes.
Yeah.
Yes, sir.
Now you feel comfortable? No.
Somewhat breaking, lekin it is understandable.
Somehow is breaking. It is understandable. Okay.
It's okay, sir. Please continue.
Okay. We were in the bookkeeping itself. We are talking. If you talk about the business level, then in business level we have to record the transaction. For recording the transaction, we have to see the sum base. Yes, sir. We have to see the sum base. What type of base we have? We have a base of invoice. That generally in layman language we call the bills. For that bills from that invoice, we generally do the bookkeeping for recording the transaction. That is why we say recording, classifying, and summarize. What we summarize? Summarize the business financial transaction systematically to know why we record the bookkeeping, to know the profit and loss account, to know the profit, how much we have earned the profit or how much we lose the losses during the specific period. If you talk about the specific period, our specific period will be started from 1st April to 31st March. That is the accounting period. Sir, what is the objective for bookkeeping? There should be some objective. Yes, there should be some objective. Show the permanent record of the business. It shows the permanent record to know the profit and loss of the business and to know the financial position of the business and determining the tax liability. So for financial position, we have to check from where? From financial position, we have to check from the balance sheet, not the profit and loss. Balance sheet shows the financial position. In balance sheet, we have two parts. One is the liability, other is the asset. We will talk, sir. Later on, we will discuss in an elaborate way. Do not worry for that. First, to understand what I am saying. Then, finally, why we do the bookkeeping? Finally, we do the bookkeeping for determining the tax liability. We have to determine the tax liability. Then, come to the second slide. Second slide says double entry bookkeeping. Double entry. See, I think you all were visible with the passbook. You have a bank passbook. In bank passbook, you have noticed there should be two type of entry. One is a debit, other is a credit. Okay. Similar way, in bookkeeping, we generally do the one debit and other is a credit. Sir, why we do the double entry system and what is the so-called? Sir, see, when before the four decade ago, we generally do the single entry system. We do the single entry. In the small stores or the storesmen, they generally do the big khata. They generally record the big khata. That is a red book. They generally keep the red book and for this entry passing. But that is a very much difficult for accounting purpose. The single entry. That is why they come with the double entry bookkeeping system. Double entry bookkeeping system means a system of bookkeeping in which accounts require a corresponding and opposite entry. We have a corresponding and opposite entry to different accounts, that is the debit and credit. In passbook, you have seen there are two types of entries showing. One is a debit and other is a credit. Then how to source a debit and credit? See, there is a general ledger they have given, cash to sales, and how they pass the cash to sales. This we'll discuss later. This is showing the how to pass the entry. Okay. Then we come to the third slide. In third slide says that accounting cycle. Accounting cycle. What is the accounting cycle and where is the start? See, accounting cycle is our to show the profit and loss account and to show the financial position. And where it is started? Where is started accounting cycle? Accounting cycle started with the transaction. So what is a transaction? Transaction is the invoice itself. When you purchase, when you sell, that is come with the transaction itself. That is the invoice. From the base of invoice, we generally do the journal entry. And from the journal entry, we do the posting and trial balance, worksheet, adjustment entry, financial statement, and ultimately we go to the closing the book. 31st March, we know very well. Closing, we generally close the books our 31st March year ended. We generally do the closing the books. Then what is the difference at present accounting system and earlier accounting system? What is the difference? There should be a difference, no? Yes, there should be a difference. In present era, we have a software system. We total have a depend on the software. Earlier, we have to record the transaction. We generally do the manual work. Earlier, before the two decades ago, we generally do the manual work. We have to maintain the ledger. We have to pass the journal entry. We have to maintain the trial balance. And ultimately, we have to do the financial statement. But present era, I think it's a very much popular. You people very much heard that we have a very popular software, Tally. Tally is a very popular software. In Tally, what we do in Tally, we generally create the ledger. We generally clear the ledger, and from the base of ledger, we generally pass the journal entry, and all the automatic, the trial balance and the financial statement. In financial statement, we consist of three components. Which three component? If you have a trading account, then we have a trading account and a profit and loss account and balance sheet. If there is no trading, though, if there is no manufacturing concern, in that case, we generally prepare the profit and loss account and balance sheet. But this is you have to understand. Then what is the difference between earlier and present era? Earlier we have to do from the base of journal. We have to base journal entry. From journal entry we come to the ledger. From ledger we come to the trial balance, and from the trial balance we come to the financial statement. But present era, in present era we only require the ledger creation. We only require the ledger creation. From the ledger creation, we pass the journal entry, and all the other thing is automatically done by the software. We do not require to focus anywhere. Then what is the difference between bookkeeping and accountancy? Bookkeeping is a record of transaction in the books of original entry. Similar way, accountancy means classification of analysis of business transaction. Sir, who will do the bookkeeping and who will do the accountancy? See, bookkeeper also are authorized to do the bookkeeping, and it's very easy to record the transaction. But accountancy generally do by the chartered accountant or cost accountant to have a professional skill, professional knowledge. They generally come under the accountancy, who have a audit nature. Then we have a bookkeeping is a routine and a clerical work which does not require any specific knowledge of skill. It's a routine work. And how to do with the base of purchase invoice or sale invoice. This is the base. But accountancy is an analytical and they need the specific knowledge and skill. Without specific knowledge and skill, you can't do the accountancy. Transactions are recorded immediately when they take place. So from the base is the invoice itself. In accountancy, we generally prepare the financial statement. Already we have discussed in financial statement, we have a three component. If we have a manufacturing unit, in there we have a trading account, profit and loss, and balance sheet. If we do not have the manufacturing concern, simple profit and loss and balance sheet we have to prepare at the end of the year. And this one question is very popular. Profit and loss we generally prepare for the year. For the year means from 1st April to 31st March. And balance sheet we prepare at the end of the period. End of the period means 31st March only. Particular date. This is a particular period and what particular date. Particular period means 1st April to 31st March for profit and loss. Particular date means 31st March only. And particular date is for balance sheet. Particular period is for profit and loss account. Then come to the accountancy principle. In accountancy principle, we have a three concepts: accounting assumption, accounting concept, and accounting constraint. In accounting assumption, we have a four component: money unit, economic entity, going concern, time period. Accounting concept: revenue recognition, matching principle, full disclosure, historical cost. These are come under the accounting concept. And accounting constraint, we have a materiality, conservatism, consistency, cost benefit, and objective. We will discuss one by one as a laboratory. Sir, come to the first part. First concept is a business entity concept. This concept is very important. This concept is very important to understand. This concept assume, what they assume? Owner and business are two different parts. Owner and business. You are setting the business. But as per business entity concept, they assume that you are different and business are different. Both are different. It means that for the purpose of accounting, the business and its owner are treated as two separate entities. Sir, how, sir? Please give one example how it is two different entities. Sir, when we putting the cash in our business now, it will be treated as a capital. It will not treat as that it is not treated as we are putting the cash simply. It is treated, business will be treated as a capital. That is a loan. That he has taken the loan. You are putting the cash, but he is taking it as a loan. That is why business entity concept, both owner and business are two different entities. Similar way, come to the next concept, that is a money measurement concept. Money measurement. State that only those transactions and happening in an organization which can be expressed in terms of money, which can be measurable in the form of money, such as sale of good. When we selling good, we are receiving the money, correct? When we payment the expenses, we are paying the money. We are received of income, we are receiving the money, and are to recorded in the books of account. When we talking in relation to money, that is come under the money measurement concept. Then come to going concern concept. Going concern. Assume that business firm would continue to carry out its operation indefinitely for a fairly long period of time and would not be liquidated in the foreseeable future. This is an important assumption of the accounting as it provides the very basis for showing the value of the asset in the balance sheet. See, when suppose you have a corporate, you have put some entity. When we have put some entity, then in that entity will be assumed, entity will be continue, but director will become and goes out. Actor will become and goes out. Actor will be expire, and entity will be not expire never. Entity will be continuity. That is why going concern concept is says that it should be never liquidated in the foreseeable future. Never liquidated. Then come to accounting period concept. We know very well accounting period. Our accounting period will start from 1st April to 31st March. Accounting period refer to a span of time at the end of the financial statement of an enterprise or period to know whether it has earned profit or incurred losses during that period. Which periods are from 1st April to 31st March, and what exactly is the position of the asset and liability, that is the balance sheet itself, at the end of that period. End of that period, 31st March only. See, this is a very important question. Profit and loss, 1st April to 31st March. Balance sheet, only 31st March. Then come to cost concept. The cost concept requires that all assets are recorded in the books of account at their which price? Purchase price. Sir, what is the purchase price? Purchase price include cost of acquisition, transportation, installation, making the asset ready to use. Sir, please give one example. Sir, suppose you have purchased the generator. Then generator, cost of acquisition of generator, and when generator is coming to your factory, then there should be incurred some transportation expenses. Yes, sir, there should be incurred some transportation expenses. When we come out to the generator, then we have to install the generator. Installation charges you have to pay. Yes, sir, we have to pay the installation charges also. And also, we have to making the asset ready to use. We have some component we required for ready to use, or some expenses we have to incur. All these expenses should be merged, accumulate, then it becomes the purchase price. And this purchase price should be put on the balance sheet. In balance sheet, we have in asset side, we have to put the generator. Generator, this much cost. Then we have a dual asset concept. Dual asset is a foundation or basic principle of accounting. This concept states that every transaction has a dual or twofold effect and should therefore be recorded at two places. So which two places? One is the debit side and other is the credit side. Double entry. In other words, at least two accounts will be involved in a transaction. There should be two accounts should be involved. One is a debit and other is a credit. Then we have a revenue recognition, or we can say realization concept. The concept of revenue recognition requires the revenue for a business transaction should be included in the accounting record only when it's realized. Until it is not realized, you can't record. Who have said? It is said by revenue recognition concept. Matching concept. The process of ascertaining the amount of profit earned or loss incurred during the particular period. Particular period means 1st April to 31st March, which involve deduction of related expenses from the revenue earned during that period. Suppose you have a one shop. Suppose you have a one shop, clothes shop. Suppose you have a clothes shop, and for running the clothes shop, you have to putting some person, putting some employee. Yes, we have to put some employee now for running the business. And in employee, you have to give a salary that should be related to particular nature of business. If you are earning from that business, from close shop, that is why you are incurring the expenses. Yes, sir, that is why I am incurring the expenses. That expenses should be allowed. That is said by matching concept. If suppose you are from that income, you are putting some other expenses which is not related to that income, then it is come under the other expenses. It is not come under the matching concept. Then we have a full disclosure concept. Full disclosure. What is given a full disclosure? The principle of full disclosure requires that all material and relevant facts concerning the financial performance of an enterprise must be fully and completely disclosed. We have to disclose all the nature of the fact, or whatever nature fact. So I see we have to prepare the balance sheet, we have prepared the profit and loss account, we have to prepare the credit account, and we have to prepare the cash flow statement. Other than that, if there is any item is left out, we have to put to the disclose. Where we have to disclose? We have to put the disclose footnote in the financial statement. Footnote. That is why we in DS we generally prepare the notes to account. We have to prepare notes to account for writing the footnote. Then we have a consistency concept. Consistency. This principle states that the accounting policies and practice followed by enterprise are uniform and are consistent over a period of time. Uniform and consistent. Sir, please explain once. See, suppose you have a inventory valuation. You are recording the inventory. In inventory, either you record the cost or either you record the net realizable value, which should be lower. But you can't change this frequent basis. You can't change this. If you recording as the inventory as a cost, then you have to record from the whole year. You have to maintain consistency, sir. Suppose you are maintaining first month you have recording from the cost, second month you are recording the net realizable value. No, you can't do. A consistency concept said that you have to record the transaction, you record the inventory from the taking the one base on the whole year. Then we have a conservatism concept. Conservatism. The concept of conservatism requires that profit should not be recorded until realized. You can't record the profit. You can't say that anticipated profit. But all losses, even those which may be remote possibility, are be provided in the books of account. Sir, please give example. Suppose you have a doubt. You have a doubt from the debtor. That means when you are recovering from someone. Suppose you are recovering from some person, you have a doubt. In that case, what we do? We do the bad debt account. We generally record the bad debt account. That transaction will be, if there is a possibility, there is a remote possibility that the amount should be not realized in coming day. That will be recorded. But we do not have an anticipated profit. The conservative concept never said that it should be an anticipated profit. Then we have a materiality. The concept of materiality requires that the accounting should focus on material fact. Material fact. Sir, what is a material fact? Material fact is depend on the nature and amount involved. Sir, from where we will get the nature and the amount? Sir, when you purchase or when you sell, then we will receive the invoice. Yes, sir, we will receive the invoice. In invoice, there should be written in the nature of transactions. Yes, sir. Even they also have to written in the amount of transaction. Both nature and amount should be will found in the invoice itself. That is why we call the materiality. It is depend on the materiality. Then we have to the objectivity concept. The concept of objectivity requires that the accounting transactions should be recorded in an objective manner. Objective manner mean free from the bias of accountant and other. There should be no error. This can be possible. How it is possible, sir? How it is possible to fulfill the objective concept? This can be possible with each of the transaction which we have recorded. There should be a supported paper. Supported paper means there should be some supported verifiable document or voucher. Sir, from where we will get the document of voucher? Sir, when we purchase, receiving the sale invoice, when we are selling the anything, we have to paying the sale invoice. Yes, sir. From the base of invoice, we have to do the verifiable document or voucher. Sir, who will be fulfill the objectivity concept? Auditor. See, when we do the audit now, what we require? We require the supported paper. And if you have a supportive paper, then it will be assumed that all the transactions which are recorded is free from the bias of the accountant and the others. This much we have a concept. Anyone who have a doubt in the concept, any concept, please do not hesitate. Please come
Yes,
forward.
sir. Yes, sir. Can I tell something about the going concern?
Yes, sir.
I have understood this fundamental concept, but why it is going concern? That is a concern.
As per Companies Act, as per the accounting, there is a concept. They are put a concept, sir. Every concept have some assume. So, see, if you have created the entity now, then director will be goes out. Entity will be never dissolved, na? Yes or no, sir? Entity will be continue throughout the period. Director will come and goes out. That is why it should be never liquidated. If director will be try to liquidate, then it will liquidate, but it automatically never will liquidate. That is itself. It is should be a going concern. Clear? Yes, sir.
Okay. They're not clear, but still we can go ahead.
Not clear? Then please say what is the query.
No, I'm
I will
not.
resolve the query.
I'm not convinced why it is a concern for us.
Sir, we do not put the conveyance. See, it is a concept, sir. The concept which is made by the accountant, we have to follow that concept. There's no assumption we have to see, na. We have to not put in the assumption. This is a concept made by the senior accountant. When they create the accounting system, na, they put in some assumption. This assumption you have to follow for preparing the accounting.
Okay, concept is clear to me. Thank you.
Clear, na?
Concept
Okay.
is clear. Thank you.
Anyone who have a doubt? No. Okay. Thank you. Then we proceeding further. See, we come to the accounting terms. Accounting term, we have a different type of accounting term, which you people have very much familiar. That is a capital. What is a capital? The capital with the person who is putting the cash in the business. That is a capital. Already we have discussed business entity concept. Owner and entity are both are different. And owner putting the cash, and in business it will treat as the capital. It is treated as a loan. Then debtor, when you sell something, then they will be a debtor for us. When we sell, he is in front of us, he is a debtor for us. Creditor, when we purchase something, we are the creditor for them. We are creditors. That is credit. We have taken the credit. That is why we have creditor. Then expenses, you know very well. Drawing. What is a drawing? Drawing means when we withdraw the amount from capital itself, from business capital. That is come under the drawing. Then we have an asset. In asset, we have a fixed asset. In fixed asset, we have a two part. One is a tangible, other is a intangible. What is a tangible? Building, tangible. Cash is a tangible. The asset which we can touch it. Machinery, that is a tangible. What is the intangible? The asset we can't touch it. That is a goodwill, we can't touch it. Brand, we can't touch it. Patent, we can't touch it. These are different type of intangible assets. Current asset, we have a different type of current asset also. The asset which is converted within a year. Within a year. That's within a year into a cash form. The asset within a year converted into cash form. That is a debtor. Debt is a current asset. Cash is a current asset. Similar way, we have a liability. We have fixed liability, a fixed liability which is pay off after 1 year. That is a fixed year. And liability which we pay off within a year. That is a current liability. The creditor is a current liability. Similar way, debtor is a current asset. Every terminology is clear for everyone.
Yes, sir.
Then we have to the subsidiary book. This all the subsidiary book. This is generally we prepare before the 2D category. But nowadays we do not require at all. For your understand, in cash book generally we have earlier we have a single column, double column, triple column, and petty cash book earlier. But nowadays we do not require at all. Other subsidiary book, we have a purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, and general property. These are the all components which are generally automatically prepared by this software. We do not require to prepare at all. Automatic prepared. And who will be useful? Or who will useful these books? This is useful by the auditor, not the accountant. Accountant is irrelevant for them. Generally, the auditor, they generally verify all these books at present. So from the base of the software, that is Tally or other software itself. Sir, now your turn is come out. Please entertain everyone. Accounting furnish data on. Please entertain everyone.
B.
Which one?
B.
Sorry, please loudly.
All of the
Financial condition
all of the
of the
above.
No, all of the above.
Sir,
All
D,
of
all
the
of the
above.
above.
Correct,
D.
correct.
D, all of the
The current asset, the long-term asset that has no physical existence but poses a value is known as
intangible assets.
intangible asset. Very good.
Intangible.
The asset that can be easily converted into cash within a short period of time, 1 year or less. Which one?
Current assets.
Current
Current
assets.
assets.
Very good. At the balance sheet date, the balance of accumulated provision for depreciation account
Is transferred to the balance accumulated provision of
accumulated
D.
which
Balance
one?
sheet. Simply deducted from asset.
Simply deducted from the asset in the
Asset
balance.
in the balance sheet.
If we take good from left out this one, we have not discussed till yet the concept of debit credit. Left out question number 5. Come to question number 6. According to convention of consistency,
Convention of accounting policies and practices.
accounting policies and practice once adopted should be consistently followed.
Follow.
This we have discussed now. This thing
Sir.
all we have discussed.
Sir, question 4, please.
Question number 4, sir, at the balance sheet date, the balance of the accumulated provision is there. Then we have to simply deduct from the asset.
What is this accumulated provision for
Sir,
depreciation?
accumulated, we generally, when we have a depreciation, we have to generally, suppose we have, this is a come under sinking fund. Then in there, we have to deduct some expense, depreciation in every month. And that depreciation should be accumulated and we simply deduct from the asset at the end of the year. Clear, sir? Then come to, according to going concern concept, business is viewed as having
Indefinite life.
which one?
Indefinite life.
Indefinite. C.
C. Indefinite life.
Indefinite life.
Indefinite life.
According to which of the following accounting and concept, even the proprietor of the business is treated as a creditor to the extent of his capital.
Business entity concept.
Business entity concept, very good. According to which of the following concept, in determining the net income from business, all costs which are applicable to the revenue of a period should be charged against that revenue.
Matching concept.
Matching concept. Valuation of stock at lower of cost or net realizable value is an example of
Net realizable value is an example of realizable
no
value of stock is
Conservation concept.
conservatism. During the lifetime of an entity, accounting produce financial statement in accordance with which of the following accounting concept?
accounting
Accounting period.
Counting period.
X Limited follow written down value method of depreciating machinery year after year due to
Consistency.
consistency.
All of the above.
All of these.
No, sir. No, sir. No, no. Consistency.
Compatibility.
Consistency. Year after year, we have to follow. Then we have to, which of the following will not be recorded in the books of accounts?
Quality of staff.
Quality of
Quality
staff.
of staff.
Bookkeeping is mainly concerned with
Recording
All of the above.
financial.
which one?
All of the above.
All of the above. Correct. Which is the last step of recording accounting of a process of information? Last step.
Preparation of financial statements.
No,
Analysis and
No, sir.
interpretation of it.
no, no.
Accounting process of information.
Last step.
Communication of information.
Communication of information. Why? Why it is last step, sir? Anyone?
Because whatever business
Payroll needs.
taken place during that period is to be communicated, either it is a profit or loss or balance sheet details have to be communicated to the concerned authority.
Concerned authority, even for us also, sir. Even for us, from the base of that financial statement, we generally purchase the shares.
Yes, sir.
Yes or no?
Yes.
We generally purchase the share now. How we purchase share? From the analysis of the financial statement.
Okay.
Then come to rules of debit and credit by modern accounts. Sir, this concept is very, very important. If you understand this concept the proper way, then it's very easy for accounting, otherwise very difficult. Okay. See, modern approach, rules of debit and credit. We have a 5 accounts. How many accounts? 5 accounts. Asset, liabilities, capital, revenue and gain, expenses and losses. 5 accounts we have. In every 5 account, we have a some example. See, asset, we can say land and building is asset. Yes, sir, land and building asset. Machinery is asset. Goodwill is asset. Brand is asset. Cash is asset. Machinery is asset. All different type of we have a component that we have treated as the asset. Similar way, if when we talking about the asset, then asset is coming to our business, we generally do the debit. Asset is coming, debit. Asset is going out, credit. Asset is coming, debit. Asset is going out, credit. Okay. Suppose, yes, sir, we have understood. Similar way, we have a liabilities. Bank overdraft, liabilities. Creditor, liabilities. Outstanding expenses, liabilities. Bank loan, liabilities. All these are coming in your business, then we treat it as a credit. When going out, this is a debit. Capital we have if capital is coming to a business, that is a credit. If capital is going, that is a debit. We can correlate with the business entity concept itself. Revenue and gain, when we revenue and gain, dividend received, interest received, commission received, profit on sale of asset, then it is a credit. Otherwise, it is a debit. Expenses, loss by fire, audit fee, printing and stationery, wages. When coming, then debit, going, credit. Clear? Now we have the concept is clear. 5 component. Now we have discussed with the correlate with the double entry system. You have to correlate with the double entry system now.
Yes, sir. For every
yes or no?
Yes, sir.
We have to correlate with the double entry system. In double entry system, suppose we have a purchase the land and building. Then what should be the entry? Double entry system. Purchase the land and building. Asset is land and building is coming.
Debit.
Land is the land debit. There should be some credit now.
Cash is going.
What is the debit? Credit?
Cash.
Cash. Either cash
or
we can say bank. Suppose we have purchased from the bank, then we have to do the bank. Similar way, suppose we are selling the machinery. Then
cash or bank is debiting.
Cash or bank should be debiting and machinery is a crediting. Similar way, goodwill. If goodwill is coming, goodwill is debit, then
cash
in form of cash or bank. Similar way, if we have talking about double entry system in form of liability side. In liability, Suppose bank loan is coming. The bank loan is a credit itself. There should be some debit.
Cash.
Either bank loan should be a come into the cash form or bank form. Similar way we are talking the capital. Capital is our credit. Then capital is a credit. Then debit should be the cash.
Cash or bank.
Cash or bank. Revenue. If you have a dividend receipt, interest receipt, commission, these are all our credit. There should be some debit, na? Yes, sir. There should be some debit. We have to put to the cash, either cash or bank. No, dividend or interest should be come from the only bank itself, not the cash. Then we have expenses. When we are putting the expenses, audit fee or printing a stationery, we are doing the debit. That should be a double entry system. We put to some credit side. Yes, sir. We have to put that. Then we do the cash or bank. Please come forward who have not understand. Sir, who have not understand, please come forward.
Excuse me, sir.
Capital account.
So yes, capital account. We have discussed the business entity concept. Yes, sir, we have discussed the business. In business entity concept, what we have said, owner and business are two different entity. Yes, sir, both are two different entity. When the owner putting the cash, then it is a debit. But as per entity, it should be the credit. It should be credit. That is why we have put the capital is the credit side. Clear, sir?
Yes, sir.
Other participant?
Sir, in this flow chart, asset account and expense account, debit is plus and credit is minus. When compared to the other liabilities account, capital account, and this thing.
No, that sir, in revenue account, that's all. Suppose dividend. Dividend is earning, na. You have earning a dividend. You have interest is earning. Commission is received. This all are earning. When you earn, that is a credit. And you are earning in which form? Either you are earning the cash form or bank form, na.
Okay, sir.
Either you are earning the cash or bank form. Clear, sir?
Yes, sir. Thank you.
Other participant?
Friends, this is the most important chart to be learned in this subject. And please take a screenshot of it and go through it again and again for 2-3 days, for next 2-3 days. This is the most important chart and it contains all the key points of this subject. Yes, sir. Please continue.
Clear, sir? It is presumed that it is clear for everyone?
Yes.
Then, see, this is a transaction form. This is a transaction. This is that we have put to the transaction. The following are the transactions, state the nature of the account and state the account with debit and credit. Simple. When we start we start the business, then it should be come under the two account receipt involved. That is what is the cash and what is the capital. And nature, we have an asset and capital. Similar way purchase, we have a purchase and cash. In nature of the account, we have a expenses and the asset. Purchase good from Raghuvir on credit. Then we have a purchase and Raghuvir two components. Debit and credit. One is the expenses and other liability. Purchase furniture from fancy furniture. Then we have a purchase furniture. Purchase fancy furniture house. Asset and liability. Sale, we have a cash and sale. That is asset and revenue. Then we come to this part. On 1st January 2015, US company sold good to customer for cash. How much? $25,000. We have already discussed debit and credit. We have already discussed the double entry system. In this way, sales. See, when we selling, and is a credit. And there should be some debit now. Yes, sir. It should be some debit. What is the debit, sir? Debit should be the cash. Clear?
Yes.
Clear now? Then next, we have already discussed the journal entry. Now we are moving forward to the ledger. We have a different type of 3 ledger. One is a sales ledger, other is a purchase ledger, and third is a general ledger. See, these are all the ledger. Journal to ledger posting. Journal to ledger posting, that we are talking about the manual accounting. We are not talking about the software accounting. In software accounting, we have to first create the ledger. Then from the base of ledger, we have to do the journal entry. This is from the software nowadays. But earlier, what we do, we have to do the from journal to ledger. Suppose some should be put at the capital invested. Some put at the capital invested. Then what should the entry? Capital, cash to capital. Capital is a credit. Cash is a debit. Suppose someone purchased the furniture. The furniture is a debit. Yes, sir. Furniture should be debit. Then in that case, we have to put in the credit should be the cash. Similar way, if you purchase the good, purchase to cash, and being payment of salary, salaries to cash, and being sales made against cash, then we have a sales cash to sales itself. Then see, this is all ledger. This is all ledger. Every transaction, there should be some ledger. See, in here, what is this ledger? We have a cash ledger, capital ledger, furniture and equipment ledger, purchase ledger, salary ledger, and sales ledger. We have created all this ledger: cash, capital, furniture, all this ledger. When we suppose we have an asset, we have opening balance we have written to balance BD, and we in there we have to do the transaction, and what we do, we have to do the closing balance. Similar way, we have a capital we have a opening, this is liability, and we opening balance BD, and closing we have a balance, opening and closing. Furniture, opening and closing. See, one thing you have to notice, that in ledger, if there is asset, then opening should be a come to the debit side. And if the liability, opening should be come under the credit side. This you have to focus. Then we have to the purchase account. Purchase account, we have a debit side. Then we have closing side. Then sales account, we have a credit side. And this way we have to create the ledger. This all ledger we are based on the journal entry. Already we have passed out. If we have posted journal entry, from the base of the posted journal entry, we create the ledger. But at present, first you create the ledger. At present, as per accounting software, first we have to create the ledger. From the base of ledger, we have to pass the journal entry. Then we come to the trial balance. Already we have discussed journal entry. From the base of journal entry, we have created the ledger. From the base of ledger, we have to create the trial balance. A trial balance is a bookkeeping worksheet like account that reflect all the credit and debit balance of all the ledger account. All the credit and debit balance of the ledger account. We prepare final account on the basis of trial balance. Then see all the debit and credit. From where we get all the debit and credit? From the ledger account. See, in ledger, suppose in ledger we have a closing balance, and we put to the here. All closing balance. This all closing balance of the ledger, we have moved forward to the trial balance. And if debit and credit will be a match out, then up to trial balance, we have correct our accounting part. Up to trial balance. Then after trial balance, we have a next part. And journal, ledger, and trial balance, we have done it. Then we come to the final account. Fourth part. Fourth issue is the final account. Final account which are prepared at the last stage of the accounting cycle. Last stage. Final account. So both the financial position where you get from the balance sheet of the business along with the profitability. They are used by external and internal parties from various purposes. We have the external parties. Yes, sir, we are external party. We also use the final account. How, sir? When you purchase the share, when you analyze the profit, analyze the company, then you have to analyze the final account. Even if we suppose even we have the valuer, and even for the valuation, we analyze the financial statement. How, suppose you have the land building valuer or plant and machinery valuer or asset category, then also you have to analyze the financial statement of every company before the valuing. Then we have a trading account. This trading account, when you prepare, suppose if there is any manufacturing concern is there. Manufacturing account. If there is no manufacturing concern, we have generally prepared the profit and loss and the balance sheet. And in trading account, all the expenses which are direct related to production. If they are direct related to production, then it is come under trading account. If they are not direct related to production, it is never come to the trading account. Indirect expenses, indirect income, that would become to the profit and loss account. The opening stock, direct purchase, wages, carriage inward, freight, direct expenses, fuel and power, by sales, by close. These are all direct or indirect. Direct production related or direct, that we have said. And this is all are indirect expenses and indirect income. That is a profit and loss. These are. Then we come to the, in final account, we have a 3 part. If there is manufacturing concern, then trading. If there is no manufacturing concern, then 2 part, profit and loss and balance sheet. Now we come to the balance sheet. Balance sheet format. Balance sheet is prepared to disclose. What they disclose? They disclose the financial position. Financial position of the company at a particular point. See, this word is very important. Particular point. Mean 31st March only. In time. But in profit and loss account, we have a particular period from 1st April to 31st March. The future performance of the company is anticipated. How it is anticipated? In terms of profitability and cash flow, and make such important economic decision. Section of the balance sheet, we have a 3 part: asset section, liability section, and owner equity section. See how they prepare the balance sheet format. Asset, we have a current asset, cash, account receivable, prepaid building rent, unexpired insurance. So these are all assets, and these are all liabilities, and these are owner's equity. These are owner's part. Capital, owner's part, retained earning, the earning which are left earlier, that put to the earning which they have not utilized any purpose, then we have to put here retained earning. Then total stockholder equity, then total we do the total liabilities and stakeholder equity. Then now your turn is come out again. Which statement about the rule of debit and credit is true?
So, if the capital, sorry, if cash is, so if the accounts receivable decrease.
Sir, many of the candidates, sir, one thing remember, many of the candidates, they generally know the answer very well, but they do not read the question in the proper way or multiple times. They failed out. They failed out, sir. I have seen. Please read a proper way, sir. Give a time.
Accounts receivable.
देखिए, जब तक आप क्वेश्चन को अच्छी तरह से नहीं पढ़ेंगे, आंसर में कंफ्यूजन हो सकता है. कभी कभी एक वर्ड नॉट लगाया होता है. Which statement about the rules of the debit and credit is true? Which statement about the rules of debit and credit is not true? इसी में पूरा आंसर बदल जाएगा. और आउट ऑफ 4, जैसे सर ने बताया, आपको पता है, एवरीवन, हर एक को ये पता है कि इसमें से 4 में से दो आंसर गलत होने वाले हैं, गलत ही हैं. And you have to choose the correct answer out of the balance 2. तो इसलिए आंसर देना बहुत आसान है. फर्स्ट ऑफ ऑल, रीड द क्वेश्चन केयरफुली 2 times, minimum for 2 times. Then only start to read the options. Yes, sir. Please continue.
Thank you, sir.
Answer B, sir.
B, correct, sir. Very good, sir. Accounts payable mean creditor. Accounts payable mean creditor. Creditor, we have a credit. When we creditor will be increased, it should be the credit balance. Yes, sir. Normal balance is a credit, sir. Normal balance is credit, sir. Clear clarification. Then come to next question. The ledger is a people who are trying now, they become self-confident. If you do not try now, then you do not become self-confident in the exam.
देखिए, जब तक आप क्वेश्चन को खुद ट्राई नहीं करेंगे, देखिए आपका आंसर गलत हो सकता है, कोई प्रॉब्लम नहीं, अभी हम लर्निंग स्टेज में हैं, लेकिन पता तो हो क्यों गलत है. अगर आपको लगता है कि सर ने जो आंसर बताया वो गलत है, तो आप यहाँ पर डिस्कस कर सकते हैं. वी आर ओपन टू ऑल. देखिए, जनरल डिस्कशन राउंड है. अगर आपको लगता है कि जो सर ने आंसर दिया है वो गलत है, तो आप पूछ सकते हैं, सर ऐसा क्यों है, मैंने ऑप्शन बी चूज किया है, ये आप ऑप्शन सी बता रहे हैं, वाई, दोनों में क्या फर्क है. तो हम आपको एक्सप्लेन करने के लिए तैयार है। लेकिन अगर आप पढ़ेंगे ही नहीं और बोलेंगे सर ने बी बोला ओके या बी है छोड़ो, तो फिर आपको एग्जाम में जाके डर लगने वाला है। तो ऐसा नहीं करना है। यहीं पर हमने थोड़ा सा अपना माइंड को प्रॉपर प्रिपेयर करना है, तैयारी करनी है, पूरी प्रिपरेशन करनी है बिफोर अपेयरिंग इन द एग्जाम। यस सर, प्लीज कंटिन्यू।
Thank you, sir.
It is C.
Answer is A,
A.
sir.
A.
A.
sir.
Correct, sir. The group of
The group
accounts
of
that
accounts
record the
that records
data for
for
business
the
transaction that is come under the
transactions.
ledger.
Yes, sir.
When recording transaction in two or more accounts and the total of the debit and credit are equal, it is
Double
called
entry system.
D.
double entry
Double entry bookkeeping.
bookkeeping entry. Correct. The account receivable mean debtor. Account receivable mean debtor. Has total debit posting how much? $1,900. And they have a credit posting how much? $1,100. The balance of the account is in?
Also, B.
Sorry?
Credit balance B.
B.
Balance
Credit balance B. No, sir.
Credit.
No. How it is credit? Its
Receivable.
account is debtor. Sir, debtor is a debit, na?
Sir, A, sir.
Debit.
A.
Correct. Account debtor is a account is a debtor. Debtor is a debit. Debit they have given the 1,900. Credit they have given the 1,100. Remaining balance would be a debit, na?
Debit होगा. A.
The beginning balance in the computer account was $2,000. The company purchased an additional $1,000 worth of computer. The balance is an account is
Debit.
Credit balance of 3,000.
3,000.
3,000.
Debit.
Credit balance of 3,000.
how much?
3,000 credit balance.
Credit.
Debit, C, sir.
Sir, debit, sir. Account.
Debit, C, sir,
Computer
C.
is asset. Computer
C.
not a liability. Computer is asset. Asset should be a debit balance always.
Debit balance.
And debit plus debit. Debit should be 3,000.
C, sir, C.
Okay.
Office supplies had a normal starting balance $75. And there were debit posting of $80
50.
and credit posting is a $60 during the month. The ending balance, how much?
20, 40, 50, 55.
20, 20.
Credit posting this, debit this, 75 and 61, 35, 135.
C. 95 debit.
95 debit. Correct. Very good. Then we have the beginning balance in bank was $3,500. Additional bank balance we have a $2,000 was received. Check were written totaling $2,500. The cash balance is
A.
2,000.
2,000.
3,500 plus 2,000. How much? And minus 2,500.
D, sir, D. 3.
D.
D.
3,000.
$3,000.
$3,000. Correct.
D.
Which entry record the investment of cash by John, owner of sole proprietorship?
D, sir.
Which one?
Which entry records the investment of cash by John?
Credit to John. Debit cash.
Correct. Very good. Very good. Correct answer should be a D. Credit John's capital, debit cash. The owners invested personal equipment in the business to record this transaction.
C, sir.
The owner invested
Debit
personal
equipment and
the
credit
business
capital.
Debit,
Equipment
and credit
capital.
capital. The accounts payable
is in dash.
The accounts payable account is in blank and normal balance is
It's a liability. And it is a normalized accounts payable means credits.
correct. Very good. Very good, sir. Accounts payable is a normal. We have a liability and normal balance we have a credit balance. Accounts payable as a normal starting balance is $800.
800.
There were debit posting $600. Credit posting $300 during the month. The ending balance is a
500.
500. 500.
what? 500 what?
Credit balance.
Credit balance.
Credit.
Which of the best explain fixed assets are bought to use in business, an expensive item bought for business, an item which is not here, which one are bought to be used in business. Very good, sir.
D.
Oh, A, sir. A, not the D. Correct answer is the A. Supplier personal account is shown in the
suppliers.
Personal account, suppliers, sales ledger.
no.
Supplier,
Purchase ledger.
No, we are not talking. We are not talking.
General ledger.
Sir, we have a three ledger: purchase, sale, general. We are not talking sale.
General.
We are not talking the purchase. We are talking about the supplier. Yeah, that is come under the general.
General. General.
Purchase ledger.
No, why purchase? Then we are not talking about purchase, no. If we are talking about purchase, then we put the purchase ledger. If we are talking about sales ledger, we are putting the sales ledger. But we are talking about the supplier personal. That is not come under the purchase and sale, and it will come under the general. Clear?
Yes, sir.
Then we come to the cost accounting part. It is a process via which we determine the cost of goods and services. It involves the recording, it involves the classification, it also allocation of various expenditure and creating the financial statements also. This data is generally used in financial accounting. Simple, we have to record, classification and allocation of various expenditure. Then element of the cost, we have a major three part. One is the labor, material and expenses. And all these costs we have a direct or indirect. Direct, indirect. And all indirect should be come under the overhead part. Production overhead, if you put to the administrative overhead, all we can say sales overhead and distribution overhead. See, this part is very important. You must know what is the basic difference between fixed cost and variable cost. Meaning, the cost which remains same regardless of the volume produced is known as fixed cost. The cost which changes with the changes in output is considered the variable cost. Nature, time related and volume related. Incurred, when it is incurred, fixed costs are definite. They are incurred whether the unit are produced or not. Then it should be incurred. Variable costs are incurred only when their unit are produced. Fixed cost changes in unit. That is, as the unit produced increase, fixed cost per unit decrease and vice versa. So the fixed cost per unit is inversely proportional, not a direct, inversely proportional to the number of output produced. Variable cost remains same per unit. What are different example we have in relation to fixed cost? Depreciation, rent, salaries, insurance, property taxes. Variable cost, we have a material consumed, wages, commission on sales, packaging expenses, GST and etc. Then these are some formulas you have to remember. Break-even analysis with the margin of safety. How to calculate the break-even point as per unit basis. You have to calculate the fixed cost. Then you have to calculate the contribution margin per unit. How to calculate the contribution margin per unit? Simple sales minus variable, you will get the contribution. Calculation of the fixed break-even point in case of sales volume. Then fixed cost divided by contribution margin ratio, not by per unit. How to calculate the contribution margin ratio? Contribution margin per unit divided by sales price per unit. Then we have a contribution margin ratio, sales price, we'll get the variable cost divided by sales price per unit, you will get simple contribution margin per unit. Then where we apply the break-even analysis? Where? When you do the cost calculation, that is very important to know the break-even point. At a break-even point means we have to the loss should be up to a certain limit line. Then budgeting and setting when we do the budgeting or setting the target, then also break-even analysis is very important, and it is very work as a motivational tool. Then process costing appropriate for which firm?
Process costing, oil refinery firms.
Very good, sir. Oil refinery, generally we do the process costing. Direct expenses, generally known as?
Chargeable expenses.
Correct. Very good. You are from the background of accounting background.
No, sir.
That is, no.
Engineering.
Okay. Then warehouse rent is a part of which cost?
Warehouse.
Distribution cost.
Factory cost.
Factory cost, sir.
Factory cost. Break-even point in unit is represented by equation.
Break-even is a fixed cost by contribution per unit.
Very good, sir. Fixed cost divided by contribution per unit. The margin of safety can be expressed as?
The margin of MOS is expressed as margin of safety, MOS. Difference between the actual and break.
Correct. Actual and break even, we get the margin of safety. Okay. We'll stop here and we are putting to the next slide. Sir, we are refreshing some of the Indias, which they may ask in for the exam. India's concept, Indian accounting standard. Okay, they're talking from India's. That is overview and what are the key aspects we have to see. The India's 16 is come under the property, plant and equipment. Property, plant and equipment. What is the overview? India 16, they say the guidance, it is guidance notes. It provides the guidance how to recording a transaction. On guidance on accounting for property, plant and equipment. Then what are the key aspects we have to consider in India 16? Recognition. How we recognize? Plant, property and equipment is recognized an asset if they meet some criteria. They have a different type of criteria. If you go to the as an elaborate way, you can understand the different criteria, but that is not required at the present stage. Okay. Then measurement. How we generally measurement the PPE? PPE is initially measured at cost and subsequently at cost less depreciation or impairment. Depreciation or impairment. Sir, what is the difference between the impairment and depreciation? Depreciation we generally allow for the fixed asset. Impairment, it is an intangible asset. Clear? Then we have a depreciation is calculated based on the asset useful life. Clear?
Yes.
Then we have a next India's we have a impairment of asset. India's 36 provide guidance of accounting for impairment of asset. In this, we have a key aspect. Impairment testing. We have to do the impairment testing in every year. Every year, as per India's 36. Entity must test the asset for impairment when they are an indicator of for impairment. Impairment loss. How will the impairment loss come out? Impairment loss is recognized when carrying amount exceed the recoverable amount. Sir, what is the carrying amount? The balance sheet figure. You have taken the balance sheet figure of impairment asset. That is the carrying amount. Balance sheet figure. That is book value. We generally call the book value. That is the carrying amount itself. And from there, we have to minus the recoverable amount. Sir, how we calculate the recoverable amount? There's some base now. Yes, sir. There is a base for calculating the recoverable amount. The recoverable amount is higher of the asset fair value. You have to calculate the asset fair value less cost of disposal and value in use. From asset fair value less cost of disposal and value in use. Sir, how to calculate the value in use? Suppose you are receiving the cash flow. From the cash flow, you have to put the discounting factor. You will get the value in use itself. Then come to investment property. India's 40 provide guidance on accounting for investment property. In there, we have a key aspect definition. Investment property generally held for on rental or for capital appreciation. Either you get the rental, or if you invest in the investment property, then you get the capital appreciation. Sir, what is the meaning of capital appreciation? Sir, suppose you are putting the 5 lakh rupees today, and next year or over the next 2 years, you will get the more than what you have invested today. That if you total your investment of 5 lakh, then after 2 years, surely you will get 6 lakh or 7 lakh rupees. That is a capital appreciation itself. Then how to measure, sir? Investment property can be measured at fair value, or we can say cost. What is the fair value model? Changes in the fair value. If you have a changes, suppose today fair value different and tomorrow fair value should be different. The changes should be fair value, and where we have to recognize, we have to put the difference. Either you are gaining or either you losing, either you profit or loss. You have to put to the profit and loss account. Simple, you have put to the profit and loss account if there is any changes in relation to investment property. Then come to the Ind AS 113. Ind AS 113 talk about fair value measurement. What they talk about? Fair value. Ind AS 113 provide guidance on measuring the fair value. What is the definition of fair value? Fair value is a price that would be received to sell an asset or paid to transfer a liability. In what we do in valuer we generally take into consideration in the fair value itself. Fair value hierarchy, we have a 3 level of hierarchy fair value. Level number 1, level number 2, and level number 3. Sir, what is the level number 1? Level number 1 means when we get the price of the asset from direct. Sir, from direct means from direct market. Market means National Stock Exchange, Bombay Stock Exchange. This is a market. And from there we will get the price. That is a direct. Level number 1. If you talk about the level number 2, we are talking the level number 2. In level number 2, we have to take the price from the market and do some adjustment in there. Do some adjustment there. That is the label number 2. Label number 3 is there also. We have to determine the price. By taking some component, we have to determine the price. That is come under the label number 3. That is why fair value hierarchy is the 3 level to come under the observable input, level number 1, level number 2, and level number 3. Then we come to the valuation technique. It is using the uses the valuation technique to measure fair value. Then we have a Ind AS 105. Ind AS 105 for what purpose? Non-current asset held for sale and discontinue operation. Non-current asset held for sale, or we can say discontinue operation. Ind AS 105 provide guidance on the accounting for non-current asset held for sale and discontinue operation. Sir, what is the key aspect? Classification. Non-current asset are classification as held for sale if the specific criteria met. How we measurement, sir? There should be some measurement part. Yes, there is some measurement part. Asset held for sale are measured at the lower of carrying amount. Carrying amount means book value. Balance sheet the book value, which is carrying amount, or fair value less cost to sell. If there is a discontinued operation are present separately in the financial statement. We are so separately in the financial statement as per Ind AS 105. Then last Ind AS we have to know, that is Ind AS 116. Ind AS 116 is the lease part. Ind AS 116 provide guidance on accounting for lease. Lease definition, we know very well what is the lease. Lease is a contract and convey the right to use an asset. If you given the lease contract, then it is our duty to use that asset. Right of use asset, leasee recognize the right of use asset and lease liability. How much lease liability they have? Lease liability, leases measure lease liability as the present value. In this, we have to put the discounting factor for calculating the lease payment. That is the lease liability, for determining the lease liability as per Ind AS 116 lease. Clear, everyone?
Yes, sir.
पेपर बिल तो कल देंगे थोड़ा क्लास में ना छूटो मत पेपर बिल लटीच 1 मिनट आ रहा है दे दे
This slide we have done already. And thank you, sir. This much you required for scoring. How much? This much you required for scoring 3 marks. Bookkeeping as well, somehow you have to knowledge the accounting standard. Any doubt you people have? Comfortable now?
Yes, sir.
If you are
Everyone comfortable with the zone of accounting? Yes or no?
Yes, sir.
Sir, break-even analysis. The third
Sir,
part is
sir, where is the situation where no profit, no loss? That is come under the break-even analysis.
okay, sir.
any other doubt? If
In
you are
that,
having any doubt or
three heads are there, sir. Excuse me, sir. In that, three heads are there. One is cost calculation and budgetary calculation, and third one is I put
Motivational tool. Motivational tool.
okay, sir. Thank you.
Sir, I think it is a comfortable zone for engineering peoples in relation to the accounting part.
I may need some more time to go through again and then.
Then it is sure, na? If you go through, then it is sure you're scoring 3 marks.
Yes, sir.
Or no?
Yes, sir. Yes, sir.
That creates the confidence.
Yes, sir.
Sir, madam, any doubt? Any doubt you people have, then please.
देखिए ये 3 मार्क स्कोर करना बहुत आसान है. 3 क्वेश्चंस मोस्ट प्रोबेबली आपको एग्जाम में आएंगे. आउट ऑफ 100 मार्क्स 3 मार्क का आपको एग्जाम में आना वाला है. एंड इट इज वेरी इजी टू स्कोर दीज 3 मार्क्स. तो इसको मिस नहीं करना है. ये मार्क्स आपने लेने ही लेने हैं एट एनी कॉस्ट. Bookkeeping and accountancy, very important part of the syllabus, as well as very important part of every human being.
Yes, sir.
कोई भी बिजनेस, कोई भी काम, कोई भी एसेट, कोई भी वैल्यू, कोई भी इंडस्ट्री, कोई भी फैक्ट्री बिना अकाउंटेंसी के नहीं चल सकती. बुककीपिंग और एंड अकाउंटेंसी इज वेरी वेरी इंपॉर्टेंट part of our life, as well as it was a part of syllabus in engineering also in final year. Economics and accountancy or economics and bookkeeping, it was a part of syllabus during our engineering subjects, in plant and machinery also, for mechanical and other allied branches, and in civil engineering also it was a very important topic. So everyone should be able to get these 3 marks. अगर आपको कुछ भी डाउट या डिफिकल्टी इसके बारे में है तो जैके सर अभी हमारे साथ हैं. आप अनम्यूट करिए और पूछ सकते हैं एनी डाउट और क्वेरी या क्वेश्चन कुछ भी है किसी भी टॉपिक के ऊपर फॉर दिस सब्जेक्ट तो आप पूछ सकते हैं. अदरवाइज वी विल मूव फॉरवर्ड फॉर अ short tea break, then we will continue with the next topic.
Is there any
So there was a chart about liability, capital, credit, debit. No, sir. Can you explain that again?
See, ma'am.
Yes, this one.
There is a 5. Okay, first I unmute of the video if you create the problem. See, we have a 5 component here: asset, liabilities, capital, revenue, and expenses. Okay, we are talking the 5 head. Suppose when the asset is coming, then we have to put it the debit balance. Simple. When asset is going, credit. Similar way, when we liabilities coming, credit, liabilities goes out, debit. Capital is coming, credit, capital is going out, debit. Revenue is coming to the credit, revenue goes out, then debit. Expenses coming to the debit, and expenses we have to credit. See, we have discussed this thing, but we have to correlate with the double entry system. When you do the transaction, we require 2 components now. Debit and credit, both components we require. Yes, we have to require both components. Suppose land and building purchasing, then land and building we are putting the debit side. Okay, but there should be, we have to put something in the credit side also. Double entry says that we have to put the 2 partner. And in credit side, what we have to do? Either you are paying the cash, or either you are purchasing from the bank route, If you're purchasing from the cash, then simply you have to put in the cash into it. If suppose you are purchasing from the bank route, you have to put the bank there, and land and building account debit to bank. Similar way, you are paying up. Suppose you have a liability, you have already have a liability. Then liability we have a credit. Suppose you have taken the bank loan, and at present you are paying the bank loan. You are paying the bank loan. Then bank loan earlier when you have taken the bank loan, it is a credit. Now you are paying the bank loan, it should be a debit. Yes, it should be debit. And as per double entry accounting system, there should be some credit also. Yes. Then what should be the entry? Bank loan account debit to bank. Similar way, we have a capital. Capital, as per business entity concept, we have learned the business and owner are two different person. Then at that time, capital should be a credit. And there suppose you are the owner, you are putting the capital, then it's the capital is a credit. What you are putting? You are putting the cash, then cash should be debit, and our entry should be a cash account debit to capital account. Similar way, suppose you have a share. Suppose you have a share. In share, you are receiving the dividend. In share, we generally receive the dividend. Yes, dividend is when receiving the dividend, we are putting the credit side. Then dividend you receive in which form? Either you receiving the cash form, either you receiving the bank form. No one receiving the cash form. Already when we receiving the dividend, we receive already the bank form. And our entry should be the bank account debit to dividend. Similar way, suppose you have an office. Suppose you have a own office. For running the office, you have to pay the salary. Yes, sir, you have to pay the salary. Then in that case, we have paid the salary. Salary is the expenses. Salary is expenses. We have put in the debit side. Then for double entry matching, we have put to the something credit also. Yes, sir, we have put you pay the cash for the employee. Either you pay through the bank, and our entry should be the salary account debit to cash or bank. Aisha ma'am, now it is comfortable, na?
Yes, sir, it's clear. Thank you.
Okay, it is just like the engineering formula LHS equal to RHS. Left hand side should be equal to right hand side. तो अगर कुछ आपके पास एसेट या लायबिलिटी या कुछ आ रहा है तो कुछ जाएगा भी, दोनों को बैलेंस करना है. तो कहां पर किस अकाउंट में उसको क्रेडिट करना है, कहां पर उसको डेबिट करना है, ये लेकिन अगर आपने ये 5 चीजें अगर आपने सीख लिया तो आप अपने बिजनेस में, प्रोफेशन में, या अगर लेट इट बी यू आर अ बिल्डर और किसी भी आप कंस्ट्रक्शन फर्म को रन कर रहे हैं, तो आपके लिए समझना बहुत आसान हो जाएगा अकाउंट्स के लिए कि कहां पर आपने डेबिट करना है, कहां पर क्रेडिट करना है. अगर ये 5 चीजें आपको समझ में आ गया कि LHS और RHS में कहां पर माइनस आएगा, कहां पर प्लस आएगा, तो बहुत इजी हो जाएगा. इसका एक स्क्रीनशॉट लीजिए, 2-3 बार इसको गो थ्रू करिए. बहुत इजी तरीके से सर ने समझाने की कोशिश की है. आपको 2-3 बार में इसको गो थ्रू करेंगे, बिल्कुल क्लियर हो जाएगा. कोई डाउट होगा तो आप हमसे पूछिए. या एनी अदर डाउट?
So by seeing this chart, we can easily identify, sir, assets and purchase will have always debit balance, and the rest of the thing will have always credit balance.
Correct, sir.
This chart is known as rules of debit and credit by modern approach. Rules of debit and credit as per modern approach. आप इसको याद रखिए. हो सकता है इस पर्टिकुलर किसी 5 में से किसी एक के ऊपर आपको MCQ ड्यूरिंग एग्जाम आ जाए. अदरवाइज प्रोफेशनल लाइफ में या बिजनेस लाइफ में ये चीजें बहुत बहुत जरूरी हैं आपको जानना फॉर डेली अकाउंटेंसी पर्पसेस. एनी अदर डाउट?
Regarding the break-even point and margin of safety, do we get any problems on that, sir?
No, sir. No. Simply they give the theoretical.
ओके, कोई डाउट नहीं है. अभी जैके सर आप क्वेश्चन पूछ सकते हैं. किसी को कोई डाउट नहीं है, सभी से आप 1 बाय 1 क्वेश्चन पूछ सकते हैं. सभी को क्लियर है?
यस सर.
क्वेश्चन पूछने के लिए तैयार हैं?